Hi guys, Will here from WD Trading, and let's dive straight in. In this video, we're going to answer the question, what exactly is a mechanical strategy and how does mechanical trading actually work, right? Now, I receive a ton of messages and emails from traders on pretty much a daily basis now who've seen me trading live here on the channel using a set of rules without any technical analysis whatsoever. They've heard the in-person client interviews and read the testimonials here on the channel, and they've heard people saying things like, all I do every day is just follow a set of rules without a single indicator, without any trend lines or support or resistance or supply or demand, nothing. I just follow the rules and I walk away. And it intrigues people, really, who don't yet know that this way of trading actually exists. Because for many traders out there, and maybe you're one of them, losing money is becoming the unfortunate norm for you. And turning that around needs to happen ideally as fast as possible, right? And look, if that is you, it isn't your fault. You've likely just been led down that rabbit hole of analysis and this indicator, that indicator, guessing, predicting. In fact, my client, Matthew McDonald, put it really well actually in some feedback that he left for us recently. He said, what's the point learning about technical analysis, trading psychology, risk management, when you still don't truly know if you even have an edge over the market? And after learning the mechanical rules I use, he adds that if you just want to forget the hours of decision making on charts, only to still be unsure if your process even works, stop and give mechanical rules a go. And Matty actually even went out of his way to share a video testimonial over on our review page a few days ago too, letting us know that since putting mechanical rules in place, he gained profitability instantly, literally just by following them. The exact same set of rules every single day. It's that simple. Seriously, you follow the rules and the money really does just come, as is proven by all of the now hundreds of clients I've worked with across the years. And if you stick with me for just roughly 15 minutes here today, in this video I will fully map out how mechanical rules work, along with actually sharing a set of rules with you so that you can actually see inside how a mechanical strategy is traded, so that you can ditch the hours of chart time, ditch the being glued to the charts, the guessing, the predicting, all of it. You won't have to risk your hard-earned money on a best guess or a blind prediction where you take a trade and really just hope that it works out ever again. This is the turning point for you, believe me. So here's what we're going to cover. We'll start with why you might want to trade mechanically in the first place. We'll cover the problems that a mechanical strategy actually solves. I'll explain exactly how a mechanical strategy really works. I'll then share a real life example via an actual live trade that I've physically taken, and we'll break this right down to the strategy rules themselves. And then we'll end by covering some additional examples, experiences, and most importantly, results, so that you can see inside these and really understand whether achieving the same might help you within your trading. So let's dive straight in with why you'd even consider trading mechanically in the first place. And to help with this, I'm going to use an example and share a story. Now, if we take our client Azri Azahari, when Azri first approached us, he was in a place that many, in fact most traders find themselves. He'd come into trading and been taught the same things that all traders are taught. So support and resistance, supply and demand, the use of indicators like an RSI, stochastics, moving averages, trend lines, and so on. So why wasn't Azri succeeding? Right? He had all of this knowledge, he'd read the books, he'd trawled through YouTube, blogs, he bought technical analysis courses. Why wasn't he successful? Well, after working with, again, hundreds of traders now over the last half a decade, I can boil it down to two things: process and proof. So let's start with process, okay? As a trader, you need a process to follow, don't you? So that your results are consistent. And you also need proof that your process actually works. And Azri, like many traders out there, perhaps like yourself too, the person watching this video, he was lacking both. Now, sure, he understood that you can buy support and sell resistance, right? But exactly where do you do that? On what market? Can you just take any support line or any resistance line wherever they form? And what time frame is best? Or if we take supply and demand, for example, the same questions come up again. Of all the zones that are out there to be drawn, which one will actually work? What market should you look at? Should you just take a trade at every single supply or demand zone? Again, what time frame or time frames should you be looking at? Which should you actually use to confirm and take your trades? And most importantly, why? See, without years of experience, without thousands and thousands of hours of chart time to help build that intuition that's actually required to get the best feel for where support or resistance works best, or supply and demand works best, or where to most accurately draw a trend line, and so on. Using these discretionary techniques, they leave you to guess. It's that simple. If you are using these methods that mean that every trade that you take is just very slightly different, or in other words, with every trade you take being inconsistent, non-repeatable, your every action is a guess. You're risking your hard-earned money, again, by making best guesses. In fact, if at this point we turn to a dictionary, okay, let's look at the meaning behind the word discretion, which actually means the freedom to decide what should be done in a particular situation. Let me ask a question. If the situation changes every single day and it's different every time, how will you ever make an accurate, proven, verifiable decision? You can't, can you? It's 100% impossible. Whereas if we look at the definition of mechanical, this means done without any thought or spontaneity, automatic. And this is where both of those words that I mentioned earlier actually find their footing, okay? Process and proof. Again, if you're trading using discretion, where your decisions change every single time that you take a trade, where your trade parameters change every day, you are lacking a consistent, measurable process, aren't you? Now, you might say, but Will, I have a process. I look for a supply zone or a demand zone, or I wait for the RSI to be oversold, or I wait for a price to test and reject a support level. That is a process, isn't it? And it is, you're right, but the actual input, the trigger, so to speak, that actually makes you take a trade is different every single time. So the process lacks proof. You're unable to actually verify it. And we all know what happens when you take inconsistent actions, don't we? You get inconsistent results, and maybe that's what you've experienced so far. Maybe up to now, your trades have been just all over the place. Maybe you win small, but you lose big, right? Maybe you doubt your decision making. And if you're trading using subjective inputs, you now know why. It's because your process is inconsistent and you're lacking proof that what you're doing genuinely works, genuinely provides an edge over the market. And if we rewind back to Asri's story, that's where he was. He'd blown account after account as he just went around in circles, trying to use analysis, best guesses, varying his inputs every single time with no idea about, again, process or proof. And in the end, he stumbled on my YouTube channel. He watched me trading using rules, using a process that never changes, using proof to inform my decisions. And he reached out to me, learned my strategies, and well, he's been consistently profitable ever since he went live using the rules that I handed over. As he says himself, both here in an interview that we did together for the channel, along within this video testimonial that he shared for us too. Now, let's move on to the problems that mechanical strategies actually solve. Okay, and let's come back to those all-important words, process and proof. Let's just simplify this. Okay, again, if your process is inconsistent, your results will be inconsistent, won't they? That's basic physics. Whereas if your process is consistent, not only are your results consistent, you can also prove that what you're doing works too by building things like performance statistics, or in other words, a back test and or a forward test. Now, you might be thinking, but Will, let's say my strategy involves identifying a trend line and then buying the break of this. Surely I can back test that, right? That is a consistent process, isn't it? See, this gets a lot of traders because they think that they have a consistent process when in fact, their process actually changes every single time that they take a trade. If we take that example, that trend line process, a trend line is in a different place every single time one is drawn, isn't it? It's on perhaps a different market, it's on perhaps a different time frame, sometimes it's steep, sometimes it isn't, sometimes it has 2 or 3 touches, sometimes it has 4 or 5 touches, and so on. Whereas a mechanical strategy solves that process inconsistency problem brought about by support and resistance, supply and demand, the use of indicators like, you know the ones, RSI, stochastics, trend lines, all of those methods that leave you guessing, that leave you really resting on intuition, on thousands and thousands of hours of chart time. It's all eliminated immediately. It's no longer necessary. With mechanical rules in place to follow, you know exactly what to do. When, as soon as your entry to performs, where within what specific market or markets, and why based on backtest and or forward test proof every single day. A consistent process and thus a measurable, repeatable, consistent output, or in other words, consistent profitability. Okay, now at this stage, we've still got more to cover in just a second, but I understand that this stuff can get overwhelming, and a few of you watching this might have questions to ask or things that you need help with. Right, so I've set aside some time to jump on a quick call with you and just lend a hand really via Skype call. So if you head to bit.ly/WB Trading strategy session, you can book in a call with me. We'll jump on a strategy session together, and if I can help, then it would be a pleasure to do so. Again, head to bit.ly/WB Trading strategy session. The link is here on the video, and I'll pop that link in the description for you to get a call booked in with me, and we'll sit down together. We'll deconstruct your trading journey so far. We'll see if trading mechanically would help, and if we find that it would, I'll lend a hand. Anyway, let's get back to the video. So now that you understand why your results have been so up and down, so all over the place, due to your process being, again, non-consistent and your inputs being different every single time that you take a trade, and now that you understand how a mechanical strategy solves these problems and removes them entirely, let's actually look at how a mechanical strategy actually works, along with how they're built. Okay, so let me share a simplified fictional example. Now, mechanical strategies are built using things like price points, session zones, entry triggers, and so on. So let's say that you, and again, this is a fictional made-up example just to illustrate how a mechanical strategy might actually be built. Let's say you notice that when a specific currency market opens at 8 a.m. in the morning, or even a stock or a stock index, for example, by awaiting the very first 10 minutes candle, letting this form and then executing either long if this candle closes bullish or short if this candle closes bearish with a fixed predetermined stop loss and target. So let's say, for example, a 5 pip stop loss and a 15 pip target, that by repeating this every single day, this provides a profitable edge. Again, I just want to point out that that example is made up. That isn't a strategy of mine. That likely won't work. It's just an example of a set of mechanical rules. But that's how they work. There is no supply or demand zones to draw. There are no support or resistance levels. There are no indicators. You're simply using specific triggers and set parameters that, again, never change. And in this case, again, they would be number one, await that first 10-minute candle. Number two, execute in the direction that this closes. Number three, place a 5 pip stop loss. And number four, place a 15 pip target. And five, just walk away. That is it. With that strategy in hand, there are no guesses or predictions to be made, are there? There is no analysis to be done. And your trading day just went from perhaps 4, 6, 8 hours of chart time to literally 10 minutes of chart time. And better still, because you now have a process along with proof, your every action is consistent. And again, what do consistent actions that are proven to work lead to? Consistent profitability. Now, next, let me actually show you a real actual trade taken using the rules for one of my strategies. Let's use my price reversion strategy as an example. And what we're looking at here on screen right now is our entry trigger. So these two back-to-back candles together tell us to buy the market with a predetermined stop loss and a predetermined profit target. So the second that that second candle closes and we're buying the market, our stop loss and our take profit get placed in as per the rules. And again, we know exactly where these will go in advance, and we're done. We take the trade, we walk away. Again, there's no trade management required. We don't alter our stop loss or our take profit. We don't scale out. We're now done until the setup forms again the following day. And if I just skip forwards here across the screen recording, you can see that price then ran straight up to our target, resulting in a £624.40 win. And that money was added to the bank balance with roughly 30 minutes of chart time, whilst we waited for the entry trigger to form, and then roughly 2 hours before our target was hit. Just imagine that for a second. 30 minutes of work, absolutely no analysis, no guesses, no predictions, no reading the news, just a set of rules that, when followed, added £624.40 to your bank balance in one morning. You didn't even have to leave the house. It took a computer, a trading account, and a set of rules, and you've made what to most people is an entire week's worth of hard work that they either don't mind doing if they're lucky and they don't mind their job, or hate if they're unlucky and they dislike their job. You've made that money with no boss, no pay packet decided on by someone else for you, no one in control of the amount of money that you make but you. And ASRI isn't the only one using the rules to pull money out of the markets, just like you watched me do right there either. If we take our client, Ava Bellos, she actually built her career on this very strategy. And she says it herself. She says, I feel like the price reversion strategy was made for me. A heartfelt thank you for sharing it, Will, along with providing coaching, which has resulted in my trading journey being a success. And she then attaches her trade record where you can see that she's made £340.08 across her last 5 back-to-back winning trades without a single loss. Again, that's 4 days of full-time hard work to some people, isn't it? Made by awaiting an entry trigger, taking the trade and walking away. And she actually walks through her success in our interview that we did together for the channel too, which you can actually watch after this video. Now, I won't take up too much time here sharing client success stories. If you've followed me for a while now, you've seen me post literally hundreds of items of client feedback. You've seen in-person interview after in-person interview. You've seen the video testimonials from clients sharing their success stories. It's all here either on the channel or at wbtradingreview.com for you to see, to watch, to listen to, and to read. So I don't need to tell you that mechanical rules instantly lead to profitability, that mechanical rules work, that mechanical rules are the answer for struggling traders, because our clients and their results, they do the talking and they provide the proof, don't they? Now, if any of you watching this video are still stuck or still struggling with your trading and you're wanting to just say, look, enough is enough, and just put mechanical rules in place so that you can ditch the hours and hours of chart time, you can ditch the lacking confidence in the trade that you're taking and so on, like all of our other clients have, then again, I've set aside some time to jump on a quick call with you and lend a hand by Skype call. So if you head to bit.ly/WB trading strategy session, you can book in a call with me. We'll jump on a strategy session together. And if I can lend a hand, again, it would be a pleasure to do so. So again, head to bit.ly/WB trading strategy session. I'll pop the link in the description of this video for you. Get a call booked in with me and we'll sit down together. We'll deconstruct your trading journey so far. We'll see if mechanical trading would help. And if we find that it would, I'll lend a hand. Anyway, I hope you enjoyed today's video. I hope that's added value for you. And hopefully now you fully understand how a mechanical trading strategy actually works, along with how important both, again, process and proof are if you're to trade profitably and, more importantly, consistently. That aside, I'll leave it there for today, and as always, trade with edge, with consistency, and I look forward to having you back here on the channel soon. Thanks, guys.